Hi, good evening, everyone. Hi, Samir, my student from the PM class. Hi, Samir, uh, Daniel, Naman, Udit. Hello, good evening. Okay, what more will Manisha and Simi. Good evening, everyone. Okay, can we start? Yes, people, can we start? Am I audible to everyone? Hi, guys. Very good evening. Welcome to this session on audit and assurance. So, let me tell you about myself. Some of you already know me. I am Satyarth Dwivedi. I'm an ACCA member, and I've been teaching for the past 8 years. And specifically ACCA, I specialize in ACCA, PM, audit, uh, and law. Yes, performance management, audit, and law. Yes, subjects are quite different. So, but audit has some portion of the law part as well. So, yeah, that's there. But other than that, there is a subjects are quite different, but I specialize at those subject, and I've had students scoring all India ranks AIR 2 in PM. I've had students scoring great marks in audit. Last time one of my students scored a 77, and I think as far as audit is concerned, we've she scored quite well. And yeah, so I expect the same from all of you. And let's just have a quick introduction. So can you just tell me what are you doing in life and where are you guys? And then I'll take you to the audit syllabus, and then I'll tell you few important things about audit. This class is going to be mostly about that. For it depends on subject to subject and how the result is. Sometimes you score a rank at 70, sometimes you score a rank at 90. So generally FR ranks are in 90s. You'll see PM ranks are in 70s, sometimes 80s also. So yeah, it depends on when how's the result and all. Which book we should buy for audit? Just use my notes. I'll give you my own notes, and apart from that, you don't need to buy anything. Just use my notes and exam kit. Any exam kit would do. BPP would be fine, which you would be getting. Any exam kit, just do the exam kit. I'll tell you what type of questions are asked. Right, we'll do that. We'll do all of that, but before we do that, I want to know all of you. And that's it. Juhi, hello. Juhi, Udit Garg, Udit, hello. Manisha, Juhi, Naman, Samir, Simi, Udit, right? Okay. Yes, can you guys quickly tell me about yourselves? Yes, people, who would like to start quickly? Can you just type in uh, who are you and where, what do you work, do you study, are you in college, or you are with some company, or what, or you just studying? Udit, you're doing BCom honors and you're pursuing ACCA, past 6 papers. Okay, and where are you doing BCom honors from? DU, which college are you doing it from, college or SOL? PG Devi, that's a nice college. That's a nice college. Naman, and you're currently doing BCom honors from DU CVS. Great, great. BCom honors. You are a CMA qualified and working CMA India or US? Juhi. Manisha, you currently MBA pursuing from Bhopal and working in integrity. Okay. Juhi, your CMA India or US? Okay, and who else? Simmi Jain. Graduate and partly into business. So what business do you do? What is the business that you have? Wholesale of material. Okay. Is that your own business or is it like you've inherited it? Inherited. Okay. Great. Great. That's actually very good. Samir, Samir, I already know, but you can tell Samir so that others also know. Samir, MCom, and you're also, yes, he's also teaching. He's doing MCom and also he's teaching. That's great. I just love this profession. Okay. Let me tell you about myself. I am an ex PWC. I worked for 4 years with PWC, and post that, I have before I ventured into full time teaching and full time training, I was a deputy manager with India Globalization Capital. It's a New York listed company. Basically, they have a fund through which they invest in multiple companies. So I was managing their reporting part, the reporting of expenses and all. So yeah, that's what we were doing there. And we had our offices, I think, in Delhi. I don't NFC NSP Netaji Subhash Place. Yes, now I remember. Netaji Subhash Place was the one. Yes. Okay. So that's it about me and about all of you. I hope more more of more people are going to join in when we as we move further. But as of now, we've got 6 of you here, so we'll be continuing with that. Let me take you through the syllabus part and anything that you want to ask. I'll be open for that. Double A. Okay, so can you see the screen? Can all of you see the screen? Yes. Okay. So this is a very important document. This is the syllabus and study guide, which will guide you through how the exam is going to be. And it's going to provide you a lot of information on how you are going to be assessed in your examination. So first, you already know a lot about how the course is, so I'll not waste my time doing that. But you are at the applied skills level. Yes, all of you know that you are at the second level of ACCA. Congratulations, first of all, those who've cleared papers and those who are in the process of coming to the level 2, right? So this is your applied skills level, and this is paper number 8 of applied skills. Now you're going to have a 3-hour exam, right? How many minutes are there in 3 hours? 180 minutes. And how many questions, how many marks are there to be scored? 100 marks. So for each mark, there's just 1.8 minute. Do not exceed that. So for a 10 marker, you've got just 18 minutes. So just think that you've got 15 minutes, and that's how you have to write it, right? Keep that 3-minute buffer, right? So that's one thing. Also, how this AA, it is related to your FA. It is related to your FR as well, FA, FR, because ultimately this is audit and assurance. The name of the subject is audit and assurance. So what are you auditing exactly? Yes, what exactly do you audit? As an auditor, as into finance, what exactly are you auditing? Do you guys know that? What is audit? Checking, right? Checking things to provide an assurance. You are auditing the financial information of the companies, right? You're auditing the balance sheet, you're auditing the P&L account, you're auditing the cash flows, you're auditing the notes to accounts, right? And there are other types of audits, obviously, but mainly what we are focused on is the financial audit, right? Right. Now, you'll have 2 sections in the exam. I was wondering why my air conditioner is not working. So there was some setting that had to be changed. So sorry. Okay. Now you've got 2 sections in the exam. One is section A and the other is section B. Section A has 3 10-mark case-based questions, and each case has 5 MCQs worth 2 marks each. So how many marks does it become? 10 mark, 3 questions. So 3 into 10 is 30, right? And there are 5 in each of them, right? 5 questions in each of them worth 2 marks each. And all of them will be MCQs, multiple choice question. Objective question is a multiple choice question, right? Section B comprises of 130-mark question and 220-mark questions. Now, see, section B is a very, very important area as far as your exam is concerned. So it is going to examine you on 4 basic questions. 4 basic questions will be there. One of them will be the risk and response. Second will be the controls and control deficiency. We'll understand all of this when we actually go and study. But right now I'm just telling you there are 4 types of questions. Then there is ethics and safeguards, ethical threat and safeguard. So 3 types of questions: risk response, control deficiency, control testing, ethics and safeguard. And then there will be a question on audit procedure, right? It's a fully practical exam. There is very less theory asked. I mean, they'll not ask you any direct questions. So there is very, very less theory asked. Okay. Total is going to be 100 marks. What do they want from you, right? You should be able to explain the concept. You don't need to cram anything. You don't need to memorize anything, right? Just the main points you need to know, and then you should be able to explain them. Should be able to explain the concept of audit and assurance and the functions of audit, corporate governance, including ethics and professional conduct. So I am going to explain you in a practical manner how we used to do the audit, and then I'm going to tell you everything what we used to do and link it to what we study. This way you will understand what actually happens in an audit, right? So this is what I love doing while I'm teaching audit. That is why I teach audit, because I've done it for 4 years and I know what exactly happens. So I mean, I have things very, very clear, and I draw a very clear picture when I talk about your how the audit takes place. So for example, for an audit procedure, I know how an audit procedure is designed, using what things, assertions you're going to use, then come to the audit procedure. So all those things will be able to explain the concept of audit. That I assure you, right? Also, you need to demonstrate how the auditor obtains and accepts audit engagements, obtains an understanding of the entity and its environment, assess the risk of material misstatement, whether from fraud or other fraud or error or other irregularities, and also plans the planning of the audit of financial statements. So what do you do into audit? Direction, supervision, and review. Those are the three very important parts when you talk of planning of an audit: direction, supervision, and review, right? Scope, defining the scope, nature, timing, scope, extent, right? All of that is very important. Then they want you to describe and evaluate internal controls, techniques, audit tests, including IT systems, to identify and communicate control risk. So there are basically risk is a large topic, and there are three types of risk that we'll be discussing: control, detection, and inherent risk. And also making appropriate recommendations. Describe the scope, role, and function of the internal audit. Also identify and describe the work and evidence obtained by the auditor. So you obtain the evidence. What kind of evidence should be there, right? This is a very important thing. What type of evidence should be there? So we'll understand that. I'll give you a brief about how audit happens and how audit is done, right? Also explain how consideration of subsequent events and the going concern principle can inform the conclusion. So subsequent events, what happens, what is a subsequent event, when does that happen, and what is all of that. So all of that from the very basic I'll take you, and then to the advanced version where there is adjusting, non-adjusting, and all of that, right? Then required to meet the objectives. So obviously we are doing our audit in accordance with the ISAs, that is the International Standards of Audit. So here when you are studying audit, no matter what you've done in your CA, CMA, CA Inter, but here we are going as per the ISAs, International Standards of Auditing. There are a few main ISAs. One of them is understanding the entity. Then there is risk of fraud. Then there is legal and compliance. Then there is using the work of others. So those are very important ISAs. Also subsequent events, also again, and it's an ISA. Going concern, again, it's an ISA, right? Also, you've got to explain how subsequent events, going concern, can inform the conclusions from audit work and are reflected in different type of auditors report and written representations and final review and the report. Demonstrate employability and technology skills. So that is very common to all the this thing. So you've got to know how to use that computer based examination, how to use Excel, how to use Word. Yeah, so that all of that is there. Now we come to the audit syllabus, right? First part is the framework and regulation. If you want this document, I can share it to you. Otherwise, you can download this document from ACCA website as well. Do you guys want it, or do you guys want me to send it? Do you guys want me to send it, or do you guys, or can you guys download it? Yes. Do you want it, or do you want me to send it to you? Okay, that says he'll download it from ACCA Global. You can find it very easily. You can download. Yeah, it's there. You can download it. Who's this Xiaomi M2101 K6P? Who's this? Xiaomi M2101 K6P. Yes. Yes, guys. Xiaomi. Can I know your name? And I don't think we've had an introduction. Xiaomi. Yeah, let us all know you. Yeah, let us break the ice, right? Let us, I mean, we uh, apart from just studying, we enjoy a lot in our classes. I don't believe in just behaving like a robot, and I believe in, you know, my students ask me all sort of questions. You don't even, you have no idea what my students, when they become too, when they become too close, when they become too frank, they ask me all sort of questions. I think Samir already knows it. Yes, Samir. So they ask me all sort of things. So that's there. We don't believe in just studying, right? We do studying and we do masti as well. So only studying will make us dull. So we will study and we will do masti as well. Okay. So, and I think Juhi, are you there? Juhi, are you there? Yes. You didn't tell us. CMA India or US? Oh wow. In our last class also I had one guy who was PM, in the PM class only. He was there. So this guy was also CMA. He was also CMA India qualified. Okay. Now coming to the syllabus part. So the first part is audit framework and regulation. You've got to study concept of audit and other assurance engagements. External audits. So what are external audits? Basically, what is bread and butter of audit? Statutory audits. Then corporate governance. Corporate governance, basically they tell you what kind of board you should have, what are the different committees that you should have, right? Then professional ethics and ACCA's code of ethics and conduct, right? So there are principles of ethics, which I will tell you, just a small short form, and that will be it. Then there is planning and risk assessment. So obtaining, accepting, continuing. How do you obtain an audit engagement? Obviously, no one in this world can tell you how do you obtain an engagement. That you have to find out yourself, because everyone's circumstances are different, right? Juhi, can you find a cost audit engagement? Can you find a cost audit engagement being CMA? Do you do cost audits? Are you into cost audits? So how do you obtain them? How do you obtain them? That's the most difficult part. Point is that as chartered accountants, as CMA, as ACCA, as CA, we are always told that knowledge is very important. But my friends, the ability to sell what you have is very important. I think the most important thing that we lack is the ability to sell. We are just not able to sell things, and that we lack it. You are into RTR, so you are in a job. You are in a job. RTR means you're in a job. But if you are into practice, if you are into practice, it's very difficult to obtain something, obtain an assignment. So you have to really, work very hard to do that. uh, I mean, you must know how to sell. You must know how to network with people, how to build a network, build a good network. That's the mantra of success in life. See, get a certificate, get an ACCA, get a CA, CIMA, CMA, whatever you want to get, but build a network. The most important part of your life will be you should know how to build and keep a network, right? That's again a very, very important thing to do, which rarely our course ever tells us. And I think there should be courses designed to understand selling, to understand how many think they are good at selling things. How many of you think you are good at selling things? Yes. Yes. Who thinks they're good at selling things? Selling is an art. Not everyone knows that. We are so focused on our knowledge that yes, this is debit, credit, taxation, this, that, audit, ISA, IFRS, this, that. We lack selling. We don't know how to sell. And selling can only come from practice. You have to keep on practicing. Just keep on practicing. Keep trying new things. When you keep trying new things, out of 10 things, one will work. And then again, another will work. And then you get into the habit of, selling things. So it's a good art to learn, right? Okay. Obtaining, accepting, and continuing. So should you accept all the engagements? That also is important. Continuing audit engagements. Should you continue with an audit engagement? That is also important. Second part is objective and general principles. What's the objective of an audit? The preconditions of an audit. All of that we are going to study over here. Then assessing the audit risks. I am very surprised with this batch. You guys don't communicate with me. You guys are not communicating with me. Yes, Udit, Simi, Naman, Manisha. You guys are not communicating with me. How many of you think you are good at, marketing and selling? Come on. It's cannot be all audit and all course stuff. Let's talk of something else as well. How many of you think you are good at marketing and selling things? And have you done it ever in your life? Udit says he's not. Why? Why do you say so? Have you tried? Udit, have you tried? What have you tried selling? What have you tried selling? Courses. What kind of courses were you selling? What type of courses were they? And were you doing it for yourself or for someone else? Yes. Excel, C plus. So you're doing it for yourself or someone else? Okay. So what is the problem that you face? What's the problem that you face while you are selling? So what were you doing? Were you calling people or what? What exactly were you doing? Were you calling them and telling them to take these courses? Rejection. Okay. Uh, I went through a phase in my life of 8 years when I was failing continuously at a lot of things, business, courses. During that time, I learned this thing. I sold life insurance. I sold credit cards. I sold loans. I was selling all sort of stuff, but not great. I never sold anything very like a pro seller does. So I always had to struggle with it. But now I know that behind selling, it's not just telling people to buy that. Now I know that a need has to be created, and how you create that need is very important. So behind selling something, there is a strategy, right? So that need has to be created. So for example, if I'm selling a course to you, right? I would probably couple it up with something else, right? Probably I would not sell Excel whole soul. I would couple it up with something else. For example, an audit masterclass or an audit runner, right? I would couple audit runner with Excel, right? Or I would couple C++ with data analytics and Python. Also, I mean, there are various strategies to sell it to. Also, understanding who's going to buy it. You need to understand who's going to buy it. So probably a class 12 commerce graduate does not need C++. He needs Excel more. A BCom pass out needs Excel more. So you've got to understand who's going to buy it and who's not going to buy it, right? And why do they need something, right? So yeah, all those things are there. Okay. Now, then you have to assess auditing risk. And anyone else who has ever sold anything in life? Anyone else? Daniel, you are not communicating. Daniel and uh, Abard TS. Abard. Am I pronouncing it correctly? You have done one internship as a app development in an IT company, but you tried. Good. You should keep trying. You know, why do we fail at interviews? You know, why do we fail at interviews? Because we do not have the skill of selling our own skill set. When you are in front of an interviewer, you have to sell your skill set. When you're in front of an investor, you have to sell your passion. An investor does not necessarily invest in your he doesn't necessarily invest in your this thing, your company. Sometimes he just invests on your passion and on your enthusiasm to do it. So I really think we should all learn how to sell. Abad TS, am I pronouncing your name correctly? Hisron Daniel. I don't know if I'm pronouncing it correctly. Abad and Hisron, is it correct? Am I doing it right? Few of the names are correct, are very easy to pronounce. Simmi, Udit, Naman, Manisha. But two of them are very difficult. Abad. Okay, you are Abad. Very good. You are Abad. And the second one, Hisron Daniel. Hisron. What is, how do we pronounce? Hisron. Okay, guys, tell me about yourselves. Both of you, Abad and Hisron. And what does Hisron mean? What does it mean? Hisron, what does it mean? Yes, tell me. What does it exactly mean? Okay, it's taken from the Bible. It should mean something, no? Mm. Okay, Abad is CMA qualified. So we've got two CMA qualified. So I'm expecting when I ask questions from you guys, you guys should be able to answer, because in one of my classes I had a few CMA inter students and they were not able to answer things on audit. So is audit an optional subject for you? I don't know why CMAs don't study as much audit. So you're working as senior officer at Nestle. Wow, that's great. That's awesome. That's awesome. That's really nice. Okay. So understanding the entity and its environment and the applicable financial reporting framework, fraud laws and regulations, audit planning and documentation. So again, this is all planning, risk assessment, documentation and all. Part C will be internal control, systems of internal control, use and evaluation of systems of internal control by the auditors, test of controls, communication on internal control, and internal audit governance, differences between external and internal audit, all that will be there. So this is the internal control and the test of control parts is important over here. Scope of the internal audit function, outsourcing and internal audit assignments. So that is again important. What is the scope, how internal audit is done, right? And what are the different types of assignments, right? Then we'll be doing audit evidence. Evidence is a very important part of audit. No evidence means no audit. If you don't have evidence for what you've done or what you've concluded, there is no audit that was done. Your conclusion, your opinion does not mean anything without without a valid evidence. How the evidence should be? Generally, in case of your audit, evidences are persuasive. Evidences are not conclusive. Okay. Then audit sampling and other means of testing, audit procedures, audit of specific items, automated tools, work of others, NPO, not profit organization, then review and reporting, subsequent events, going concern, written representation, audit finalization and final review, and the independent auditor's report, right? The last part, I will just leave it to you. So yes, this is the, in a nutshell, this is your syllabus. We can go inside and do it also. There is more information on your syllabus. Yes, so you can go read this out. You can download this document. There is more information on this. What are the amendments to the AA syllabus? Changes. So first of all, planning and risk assessment, B1E, B1F, word of learning outcomes extended and revised to reflect the new terminology of ISA 220, right? It was revised in 2020. So that's been wrong. It's been very long. Planning, again, same thing, right? So not much of a change, right? Okay. And Hizron, what are you doing? Abad is working as a senior officer at Nestle. Hizron, what are you doing? Yes. Okay, let me take you to my screen where I'll be telling you things which will form like a foundation for your audit. Before moving on to the audit, exactly the audit part, we'll do a few things which will form as a foundation for your audit and assurance. So this is class number one. Class number one, basics of auditing. Fine. So now when you are auditing, what is the one thing that you're going to do as an auditor? As an auditor, what are you going to do? You are going to give an assurance to the other party. You're going to give an assurance to the other party. Just give me a moment, right? 2 minutes. Okay. Okay. Sorry. That took long. Yes. So as an auditor, you are basically giving an assurance to your client, right? That he's come to you with a problem that, sir, I don't know what is happening. So who's your client? It is the shareholders, right? Shareholders are the one who you give assurance to. In a company, you're giving an assurance to a shareholder, right? So as an auditor, you are always giving an assurance. But what kind of assurance is it? Is it absolute assurance or limited assurance or reasonable assurance? So you're always giving them a reasonable assurance. Sir, why? Why are we giving a reasonable assurance and not absolute assurance? Tell me. Why are you not giving them absolute assurance? Tell me. You are giving them reasonable assurance and not absolute assurance. Why? Tell me. You never give absolute assurance. I can never say. So suppose someone's parents come to me and they ask me, sir, is my child going to pass? Data is of past, so that data is final. That is not a reason. So reasonable assurance, let me tell you, reasonable assurance is that is my child going to pass? So I believe, right, that the child is going to pass, but he will pass. That is that is a that is absolute assurance. But I believe he's going to pass. That is reasonable assurance because he's studied, he's given the mocks, he's done his exam kit, he's done all that was required. So that's why I'm able to give reasonable assurance. But if you ask absolute assurance, that I cannot give because he still has to give the exam. He still has to write that, go through those 3 hours. He still has to write for those 3 hours. And I don't know what he's going to do. So in an audit, whenever you are doing an audit, there are inherent limitations of an audit. Whatever evidence that you collect. So evidence is always persuasive. Okay. Evidence is never conclusive. For example, you have to find out what is the closing balance. What is the closing balance? How do you find out your closing balance? Tell me. If you are an auditor of a company and you want to find out what is the closing bank balance, tell me. How do you find out a closing bank balance? How will you find out? Tell me. Yes. Tell me how. It's a very basic thing. You want to find out your own bank balance. How do you find it out? How do you find your own bank balance? Passbook, right? From the bank statement. Yes. So what you do for the client is that you send a letter to the bank that confirm us this bank balance. You tell the client that confirm me this bank balance, if this bank balance is there or not. So he'll either say yes or he'll say no, or you give him an open-ended letter that please confirm the bank balance. So he'll write back and give it to you. But tell me, is that proof conclusive? Is it a conclusive proof? What if he does not have the transactions for the last 2 days? Or what if there was some check that was deposited but was not credited? Is it conclusive? Is bank statement a conclusive proof? No, sir. It's a persuasive evidence. it can persuade you to believe. And that is why in your reasonable assurance, you say, I believe that the accounts are true and that they present a true and fair view. But is it persuasive? Yes. Is it conclusive? No, sir. Okay. Okay. You never give absolute assurance. You always give reasonable assurance, right? Okay. Now, there are three parties basically to a, there are three parties to a assurance engagement. What are the three parties? One is the user entity. One is the user entity. Second is the, yes, whenever you're doing an audit, who is doing the audit? For whom you are doing it? For the user. For whom are you doing it? You are doing it for the user, right? Who is doing the audit? The practitioner, right? And who's prepared the financial statement? On what are you doing the audit on? You are doing it on the financial statement. And who's the party? Responsible party. Who's responsible for preparation? See, as an auditor, always remember one thing. Never will you ever prepare financial statements. Never. If you're auditing financial statements, you will not prepare financial statements. So who will prepare the financial statement? It is the responsible party, right? It is user. For whom are you doing the audit? User, which is investors or shareholders. Investors or shareholders. Then who's doing it? The practitioner, who is an ACCA or CA, right? These two can do audit. Thirdly, who's the one who's responsible for preparing? Responsible party, that is the directors. Tell me one thing, a very basic assumption about auditing. A very basic thing about audit is that you cannot prepare the financial statements that you are auditing. Why so? And there is the entire the essence of audit is in one word. Tell me that one thing. Why you cannot prepare financial statements that you will audit? Tell me. Why will you not prepare financial statements that you will audit? Tell me. Yes. Come on, I'm waiting. Yes. The entire essence, it is work of another. Okay. There can be manipulation. There can be manipulation. Okay. But the entire essence is what Manisha says, that because independence will not be there. What is independent? Now tell me one thing. will you ever, if I give you homework, if I give you homework, if I give you 10 questions, I've given you 10 questions. Now tell me, and I give you, I tell you each question is worth 10 marks. 10 marks. Every question is worth 10 marks. Tell me how many marks are you going to give yourself after you do the homework? How many marks out of this 100 marks? How many marks will you give yourself? Udit, why 70? I told you, you do your homework. You check your homework. This is a 100-mark homework. How many marks will you give yourself? Why 70? I would give 100 to myself. Why? Because when you're checking your own work, you're not independent. You are biased. Independence is not there. There is, obviously there is bias. I thought 7 question of 10 marks. No, it's 10 questions of 10 marks each. Because you are not independent. And that is why, as an auditor, because you'll have bias, when you're checking something that you've made, no one says that their kid is wrong. Suppose there is a fight between these two. Right? If these two, and if parents of this kid come and this kid also comes, they also come, and parents of this say, this is Changu, this is Mangu. If Changu's parents come and Mangu's parents also come, will they say that my kid was wrong? Suppose they are fighting, and Changu breaks his hand, Mangu breaks his leg. Will their parents ever say that my kid was wrong? Punish him? No. Yes, the child is always there. My child is always right. My child, no, my child is Raja Beta. My child is Raja Beta. How can he do anything? Because they are not independent. And that is why it is said that homeschooling is not very effective. Because you are not independent. A teacher will be independent. If 50 students are there, a teacher would generally be independent in handling those 50 students. Sometimes some bias comes, but generally they'll be independent. But parents, if you are homeschooling your kid, he will never ever grow. His brain is never going to grow. Why? Because they are not independent. So that's why Changu becomes Raja Beta and Mangu also becomes Raja Beta. So who is wrong? Then who finds out? Then no one can find out, right? That is why it's a very important part of an audit that that you don't prepare the financial statement. The responsibility of preparation of financial statements lies solely with the responsible party, which is the directors. Okay. Now, to do an audit, you will, okay. Now, this independence, how do you ensure there is independence? How to ensure that there is independence? Why an ACCA or a CA is preferred, and why not anyone else? There is independence. How do you ensure? Yes. How do you ensure that there is independence? Because see, there is always an external party who's auditing. Practitioner is not on the rolls. Practitioner is not taking a salary, right? He is bound by his association's code of ethics. He's bound by his association code of ethics. He's bound by his association's code of ethics. Tell me. Now he's bound by his association's code of ethics. Now as ACCAs, you have certain code of ethics. Let me tell you. What are the code of ethics? ACCAs. To be an auditor, you have to follow to be an ACCA only. That is how the profession itself controls the quality of audits, by binding you with some code of ethics. So ACCA's code of ethics, right? What are these code of ethics? I call them IMCOPP. I call them I am cop. Okay. To make it very, very easy for you to understand this code of ethics, right? Because how do you ensure otherwise, if not by independence? First of all, you do not take a salary. Secondly, you're bound by your code of ethics, right? Also, there are other things. There are some threats that we minimize, right? Threats are called as fussy, and fussy threats are very fussy. And secondly, the threats and the safeguard I call as scissor. So fussy threats, cut them with scissor. That's my entire story on this thing. Now I call these code of ethics as I am cop. Now I stands for integrity. C stands for confidentiality. O stands for objectivity. P stands for professional behavior. And the last P stands for professional competence. And due care. So these are the code of ethics. Now, integrity means honest behavior and straightforwardness. You have to be honest in whatever you do. Your dealings, you should be honest in your dealings. Confidentiality means that you have to keep your client's data confidential. Don't disclose it to others, because you have some of the because when you become ACCAs, right, you'll have data. For example, if Juhi, okay, if Abad, are you there? Abad, are you there? No. Okay, who else is a CMA qualified? Juhi, are you a CMA qualified? Yes. So suppose you have data of you have financial data, right? You have the value of inventory, and you have the generally you're working in finance, right? So you will get access to, say, if you are a listed company's cost accountant, so you will have access to financial statements, right? Now you disclosing that data to someone could cause a huge loss to the company or the other shareholders, right? People could make secret profit. They could indulge in insider trading, right? And that is why it is your responsibility to maintain confidentiality. Confidentiality, generally, unless and until you are required by the law to disclose something, you do not disclose that, right? Or you are bound by your moral ethics, right? Okay. O is for objectivity. Now, what is objectivity? Basically, objectivity is not having bias. Objectivity is without any bias. Should not have any bias. That is objectivity. Then there is professional behavior. What is the professional behavior? You have to behave professionally. Whatever your dealings are, don't be shabby. Don't appear shabby. Be neat. Be kind to people, right? And behave in a professional manner. Don't give statements that are absurd, right? So you have to behave very professionally. Lastly, professional competence and due care. So whatever work you take up as an auditor, only take up work that you are competent in, that you know that you can perform, right? For example, if I can teach audit, I have taken audit. I cannot teach data analytics, so I will never take data analytics. If recently I concluded a batch of PM and advanced tax, only because I know how to teach advanced tax, only because I know how to teach PM, I took that. But if you ask me to teach chemistry, if I'm teaching chemistry to you, just imagine what is going to happen to you, to your paper, right? So don't study chemistry from a commerce teacher, right? So professional competence and due care. So this is again very, very important. Now, obviously, when you are doing an audit, right? An audit is nothing without evidence. So if you do not have evidence, your audit will mean absolutely nothing, right? So you must always take evidence of your audit. So what should exactly be the evidence? I've prepared a short form for this, for basically for the purpose of evidence only, that it should be SAAE. Psi. Evidence should be psi, right? Which means auditor should have a sigh of relief. When you see evidence, you should have sigh of relief. Sigh of relief. Yes. What is sigh? Sigh means sufficient, appropriate. Now there is an entire chapter on evidence which we will study, that how much is appropriate in certain conditions, how much of evidence is appropriate, right? We'll study over there. Sufficient, appropriate, audit evidence. So this should be your, how much evidence, what should be the characteristics of evidence? You should always collect sufficient, appropriate, audit evidence. If you don't have sufficient, appropriate audit evidence for something, and that is material and pervasive, give a disclaimer that we are unable to perform audit on this. Because without any evidence, without an evidence, how can you perform your audit? Because audit is a proof. Evidence is a proof that the proof of audit is evidence. So evidence is a proof that you've done the audit. Okay. Yes, people. Are things making sense? Is it becoming a bit, how's the introduction to this part of audit? Are you understanding things? Is it making sense? Why do you need evidence? Evidence you require to, if you say that this debtors numbers look fine. Suppose you have a balance sheet. You've got a balance sheet, and over here you've got debtors, right? Debtors inventory. You've checked debtors and you say that this is fine. This is the tick that you make, red tick. You say debtors are okay. But how do you ensure debtors are okay? So you'll need to get evidence, evidence of existence, get confirmations from debtors, see if they've paid in the future or not. So if you are auditing on say 30th of June, you're auditing the balance sheet of 31st of March, then see if they've paid or not. If they are not paying, then there is a problem with them. Okay. Yes. Yes, is that fine? Yes, people. Are things making sense? So that's why you need evidence. Your confirmation is evidence. What you've checked is your evidence. If they've paid, bank statement should reflect that. That should be your evidence. Right? So this is again very, very important if you look at this. Now, another thing, tell me one thing. You go as an auditor, you go to your client. Can you check everything? Can you check everything? I'm just introducing you to the nitty-gritties of audit, to the basic words that we are going to use in audit. Can you check everything? Then what do? Have you been an article or something? Can you check the entire, all the transactions 100%? No, no, sir, we don't. Then what do? Has anyone ever done an audit? Yes. We do something known as sampling. We do sampling. We take out a sample. But to take out this sample, you need to determine something known as materiality. To take out this sample, you'll have to determine materiality. What is materiality? Can someone tell me? I've got CMA cleared people. I've got people who've done CA Inter also, right? BCom, MBA, all of them. Can you tell me what is materiality? We do something known as sampling, but sampling we will do on the basis of materiality. What is materiality? Yes. Okay, I take that, something that is important and relevant. I'll give you a very good example, which happened with me. It happened with me while I was auditing the balance sheet. I was auditing a client, a listed client, significant, yeah, material significant. Okay. And what else? I'll give you an example, then I'll tell you what really is materiality. So as a first year article, when you go and start your journey as an auditor, or after you join a big four firm, so your first thing is to check expenses. You're the first thing that will come to you is a pile of vouchers. I used to be sitting at one place, and till here, front, back, and here, everything used to be filled with vouchers. I used to keep picking out vouchers and then checking each the bills that we have taken in the sample. Right? They used to bring more and more things every day, and I used to check them. So once I was checking, and I found out that there is a 1.5 crore consultancy fees. Right. We check on auditing samples. Manisha. We don't check everything. Obviously, we check the samples, right? So I was checking that, and I came across there was 1.45 crore of consultancy fees. So generally, when it is such a huge amount, right? 1.5 crore, is it a small amount? Tell me, by any chance, one voucher of 1.5 crores. No, sir, it's not a small amount, right? So when I was doing this, 1.5 crore bill came to me. I said, very good. My expenses are covered, because that one voucher, it covered the consultancy, entire legal fees, legal consultancy head itself, which I was auditing. So I went to my boss and I showed him that this is a 1.5 crore. So I went to the client first before showing it to him. I went to the client and said, "Ki, sir, this is too huge. You cannot just sign a voucher for it. You just cannot sign a voucher for 1.5 crores. There has to be an agreement for it. Without an agreement, how can you spend 1.5 crores on someone? Show me the agreement." Because you cannot sign, like, it's not, you are not purchasing, like, it is not wages. This consultancy, this 1.5 crores of consultancy. This is agreement. Show me the agreement. There must be an agreement. He said, "Sir, there is no agreement." And this was given to some consulting firm. I tried calling them. I tried calling the number of that consultancy firm, and they responded. They said they are land consultants. These guys are, they said, when I saw there is no agreement, so I tried calling on this number. They said that they are land consultants. Now tell me, 1.5 crores of consultancy for land consulting. I tried telling them that you've been paid 1.5 crores by this company. They said, "Yes, but it's between us and the company. You cannot tell you anything." So I went to the client and asked him, "Sir, what is this? This looks, how, you tell me, what does it look like? What it must have been?" What does it look like to you? And I was just, I think 20 years of age, 19 or 20, I must have been. 22, I left the job only. Okay, to show money in white, yes, can be. And what else? What else? If I tell you, how many of you are from Noida or Greater Noida or Gurgaon? Anyone who's from Noida, Greater Noida, Gurgaon? Yes. I've got so many stories of audit. Man, that's just crazy. Yes. Anyone who's from Noida, Greater Noida, Gurgaon? Anybody? Yes. Anyone who's from Noida, Greater Noida? Where are you guys from? Can you tell me quickly? Quickly, can you tell me before I go on a break? Can you tell me where are you guys from? Simi is from Mumbai. Okay. Mumbai. So you must have seen Navi Mumbai. Naman is from New Delhi. So you must be knowing Udit and Naman. You must be knowing Noida, Greater Noida, Gurgaon. Yes. So basically these places, Noida, Greater Noida, Navi Mumbai, these were all villages. These were land parcels. These were land parcels. Now, if you see in Navi Mumbai, Simi, I've been to Navi Mumbai, by the way. If you see Navi Mumbai, if you see Gurgaon, if you see Noida, Greater Noida, these were basically villages, right? These were not part of the city. So they had agricultural lands, right? They had agricultural land. Yes. So these places, they had agricultural land. Bhopal also, yes. Bhopal, Indore, Bhopal. Okay, Manisha, you're from Bhopal. If you look at Indore, places around Indore, it is all now being developed. This was all agricultural land. What these big companies do is, basically they convert these lands. They convert these lands. They convert the use of the land. There is a section in the land transfer of property or the Land Revenue Act. I don't exactly remember which book, although I'm myself an advocate also, a qualified lawyer. but I don't know which book. I'll find out and tell you. There's a provision of converting the use of that land from agriculture to commercial. What these companies do is they pay bribes. They pay bribes, and they pay bribes to convert these lands. But can you pay bribe in white? Will an IS officer take 1.5 crores of bribe from you in white? You'll have to pay him in cash. So what they do is they use these consultancy firms to pay these bribes. So what these guys will do, they'll buy an asset overseas for the IS officer's wife, in the name of the wife, the father, or anyone, someone. So that is what exactly they do. So this was a huge thing that I found out. Later on, what happened to it, I don't know. They must have settled an agreement. They must have shown it somehow. But this was bribe. I knew it. And I did tell this to my seniors, but they closed it. Some partner and CFO level conversation. Little articles work was overlooked. But no problem. At least I found it. At least my seniors know that I am working. Right? Ego kills a lot of talent. Don't have any ego. If your work does not reach the conclusion you think it should have, doesn't matter. Everything reaches its right conclusion. Otherwise, it will destroy the balance of things. So do your work well. A lot of times what happens is that students tell me, students give a review. Touch wood, it hasn't happened anytime soon. Not in the past few batches or past few times. But what students say is that we did not enjoy studying. We don't like the way he teaches and all. I think I have given my more than 100% to teach, to tell the students how things happen, what happens. But the problem is that if those students liked my work, I would have stopped there. There was a coaching which I used to work with. I'll not name them, and they somehow they broke I think they in between only they ended the agreement. They said that students are complaining, but now when I look back and I find out, at that time I had some problems were there, obviously. My things were not good and I needed money, but still they broke that agreement and there was a problem. But when I look back, I think that if those students liked me, right, if they would have liked me and they would have given a positive review, I would have been stuck there. That is not growing. Where I am doing things that are growing. Here I'm teaching you guys, this thing is growing, but I would have been stuck over there. And they had a very binding agreement with me. So whatever happens for the good. I learned it when this one thing that I found out, it did not reach its right conclusion where it should have reached the auditor's report, but it did not reach the auditor's report. Right? So if it does not, just do your work. I kept teaching 1, 2, 3 students, but I just went on. I just kept on teaching. I never did I ever back off from that. And I really think that has served me well. That's given me a lot of strength to keep going. Don't stop. If all my contracts are ended right now, I'll pick up my pen, I'll pick up my board, which is there. I'll pick up my board, I'll pick up my pen. Even if one student is there, I'll start teaching that student. That is it. Just keep doing your work. Who gets the credit? Don't worry. Who gets the money? Who gets the promotion? Who does not get the promotion? Don't worry for these things. They don't matter. They are not material. You're doing materiality. They're not material. Your work is material. It will speak one day. One day, when the time comes to you, you will be the best, and people are going to love you and respect you for what you do. Just don't worry about who's getting the credit, who's doing it, who's not doing it. Don't worry. Everything falls in place. So materiality, now coming back to materiality. So if I omit this, now what happened was this was never reported. This 1.5 crore bribe, it was never reported. It is illegal. Yes or no? It is illegal. Yes, people. Yes, sir. It is illegal. But since it was not reported, shareholders never got to know of this. I don't know it was in their interest or not, but we should have disclosed it. So anything whose omission can change the decision of a user of financial statement is material. Whose omission or misstatement or omission. If you misstate the amount also, if I say this is just 1 lakh, 1.5 lakh, misstatement of amount, that will also change the decision of the user. If I omit entirely that I paid 1.5 crores, at least auditors should have written that it is 1.5 crores. We have seen that this is paid as consultancy. We are not sure that this pertains to what, why this consultancy is paid. For what is this consultancy paid? We are not able to find out the nature. They should have given the disclaimer, but they did not. They gave a clean statement, so that's okay. But materiality is anything, the omission or misstatement of which can affect the decision of the user. Okay, I hope you did understand something, right? Okay, let's go on a break. 20 minutes. When we meet at 7:25, 7:20, between 7:20 and 7:25 we meet. 7:25 we meet. Okay, it's going to be a 20 minutes break, and when we meet, we'll move on our things to more things like this, right? I'm going to discuss with you, to tell you all my stories, whatever it happens, whatever happened in my life. I've got like so many stories. Yes, and we'll discuss all of that. So we meet. Okay. Yeah, you guys there? I'm also back. Yes, are you guys there? Okay. Naman says he's there. Manisha says she's there. What about the others? Fine. So this was about sampling. Now, see, another very important part of sampling is how, because the greater the sample, greater means the more the sample, the more work you have to do. Yes, more work, right? So before finding out that what is your sample or how do you take out sample, there is something known as ISA 315. So ISA 315 says that you should obtain an understanding of the entity, its business, risk, and controls. So ISA 315 talks about understanding the business, controls, and risk of the entity. And this is where at the planning stage. So the first, can you just go and start doing your audit? No, you have to plan the audit. In planning, you'll need to determine who will do what work. For example, if someone has not done anything and you give it to him whole soul first time, can you be assured that he'll do it properly? No, that person has to be supervised, right? So that is why I say that ISA 315 is very, very important. Understanding the entity and its environment. And they say that you have to do risk assessment. Now see, basically so this basically talks about risk assessment. So when you go initially, you perform certain steps, which is generally I say these are the vowels A, E, I, O, U. So though you perform A, E, I, O, U, that is your risk assessment. There are 3 types of risk, 3 major risks. What are the 3 major risks that I'm going to just introduce you because obviously we have individual chapters on these, which we will do when the time comes. So risk assessment, first of all, this includes, so risk is based off, there is three types of risk, right? One is uh, inherent risk. Second is control risk. And third is detection risk. Now let us understand each of them one by one, not in great detail, but a bit about each of them. Okay, so firstly, let's understand inherent risk. What is inherent risk? Before you understand inherent, so I think one of you are doing a business. Yes, who's that person who's doing a business? Who's inherited a business? One of you has inherited a business. Yes. Simmi. You've inherited a business, but along with inheriting the business, you have inherited some risks. What is the risk? You don't just inherit the business, you inherit risk as well. So whatever risk by very nature of the industry or nature of the business, changing technologies. For example, do you remember there was a company called BlackBerry? How many of you owned BlackBerry phones? Yes, tell me. How many of you owned BlackBerry phones? Do you know there was a company called BlackBerry? But BlackBerry is no more. BlackBerry does not exist anymore. There are no phones, nothing of BlackBerry. Why so? Yes. Because inherently the phone industry evolved. There was technology that changed. Same thing. They did not adopt to the new technology. They did not come up with a new phone. They just relied on one thing, that was their BlackBerry Messenger. And that is the inherent risk. So as volatility is also a risk. So for example, if you're auditing an NBFC, one of the greatest inherent risk is volatility. That NBFC's business is so volatile. Interest rate goes up, people start putting money in bonds. Interest rate goes down, people start borrowing money. So an NBFC has to keep a track on the volatility, credit worthiness of the customer. So by its very nature, by the kind of technology that is used, that industry becomes inherently risky. So this is inherent risk. What is control risk? Control risk is a risk that controls, basically you need to understand what are controls. Controls are processes designed to prevent an error, right? Control is a process designed to prevent an error. For example, authorization, right? Or segregation of duties. What is segregation of duties? So suppose two of you are there and I say that whosoever collects cash in my business, whosoever is collecting the cash and signing that I've collected this much cash, they don't deposit the cash. And the person who deposits the cash, they don't pass the entry for cash. So this is segregation of duties. This is a control. This is a type of control. What is control risk? Control risk is that control exists, but it does not operate effectively. Control risk is that control exists, but it will not be able to prevent or detect a misstatement. Control risk is that a control exists, but it will not be able to prevent or detect a misstatement. It cannot prevent it from happening. Control should either prevent it from happening or it should detect as soon as it happens. But it will not be able to prevent or detect a misstatement. Okay, they'll not be able to prevent or detect a misstatement. Fine. Yes. Now, inherent risk. Do you understand what is inherent risk? Yes, guys. Don't worry, I'm not ending the audit syllabus. I'm just trying to introduce you to things. This is just the upper layer. If you look at a sea, right, and you see there are waves and all, that is just the upper layer of the sea. It's deep inside. Inherent risk, you understand? By the very nature of business, by changing a technology, by way of volatility. Control risk, you understand? Now, both inherent and control risk, they are dependent on the entity. Both inherent and control risk are dependent on the entity. How risky is the entity? That is again dependent on the business. How well the controls are? That is again dependent on the entity. But one type of risk is dependent on the auditor, which is the detection risk. Detection risk is the risk that the procedures of the auditor, that the audit procedures will not be able to detect a misstatement of the procedures of the no, that the audit procedures. And this is one risk which is dependent on the auditor. So how well the auditor performs a particular task. So risk that the audit procedure will fail to detect a misstatement. But okay, I agree that inherent risk, control risk is dependent on the entity, while detection risk is dependent on the auditor. But one thing, tell me, why do you think frauds happen if there is audit, if there is controls? Why do you think frauds happen? Why do you think frauds happen? Why do you think fraud will happen despite the auditor doing his procedure, despite the controls being there? Tell me, why do you think the fraud happened? Tell me. They bribe the auditor? No, not really. Auditor takes a good fees, so he does not have to be bribed. The big four firms take a lot of fees from the clients. They need not be bribed. They're not required to be bribed. Maybe in the audit sampling, yes, that is one of the risk is sampling risk also. One of the detection risk is sampling risk also. But see, the difference between an error and fraud. Difference between an error and fraud. When we look at error, if I tell you what is error, now tell me what is error. There is no intention to commit the error. In an error, there is no intention. But if you look at fraud, the intention to to defraud is there, because the intention is there. So this will always have a carefully designed scheme. It will involve collusion of the more than two people. There will be a carefully designed scheme, and collusion of two or more people. There is always collusion of two or more people. So error and fraud, there is no intention. In case of error, there is no intention. Okay. But in case of fraud, there is intention. Right. So there is no intention. But in fraud, there is intention. Now, the problem is that the procedures in our audit, our audit procedures are designed to, problem is that the audit procedures are designed to find errors. Our audit procedures are designed to find errors. Our audit procedures are not designed to find frauds. That is the problem. You don't go in with the intention of finding a fraud. When you are an auditor, there's a very old saying in audit that an auditor is a watchdog and not a bloodhound. An auditor is a watchdog and is not a bloodhound. That is a very old saying. You don't go sniffing frauds. You don't go sniffing frauds. You go with an intent to give an opinion, find the errors, get them corrected. If they're not corrected, then report the errors. But your audit procedures have a limitation. For finding the frauds, we have other type of professional. They are certified fraud examiners. Have you heard of this? Have you heard of a certified fraud examiner? So the procedures of a certified fraud examiner are those to find frauds. For example, I'll give you an example from something that I read very recently. Okay. Now there was a Abg Shipyards fraud. How many of you know about it? Yes. There is an Abg Shipyards fraud. How many know about it? Yes. Do you know about the Abg Shipyards fraud? Tell me. You don't know. Okay. What about the others? Yes, 22,000 crore fraud. Okay. So this company called Abg Shipyards, they took out 22,000 crores of loan, and they never paid those loans. It was taken from a consortium of banks, a group of banks, which was led by the ICICI Bank. Right. So they did this 22,000 crore fraud. Now, how is it linked to the audit? There is a 2016 report, auditor's report, which says that the auditor had no reason to believe that the company is going to falter on its loan repayments. Just imagine, there is a report, audit report, which states, and they are doing it since 2012. This is 2016 auditor's report. They say that we don't have a reason to believe that they'll default on their loan repayments. 2019, the SBI approaches Ernst and Young to do a forensic audit. So these basically these CFEs, they do forensic audits. So SBI approached EY to do a forensic audit for a forensic audit. And finally, EY discovers this fraud. EY discovers this forensic audit fraud. And later on, a charge sheet is filed by the CBI. Directors are sent to jail and everything. But just imagine the auditor, because they know, because the auditor knows that the procedures are not to detect fraud and to detect errors, right? Whether due to the misstatements due to errors, uh, the procedures are to detect misstatements due to error and not due to fraud. So he knows that he can, by giving a clean check, he can go away very easily, because it's a matter of judgment, right? Audit is a matter of judgment. A lot of judgment is involved. You can play with evidence in an audit. You can say that give me this evidence, I'll give a clean check. And if the client produces that evidence, then no problem. So that's why they say that the auditor's procedures are not to design, not to discover frauds. And frauds are very, very well carefully planned schemes, right? Okay. Right. Okay. So that's how, auditors have their chances, and auditors can escape away. And that is one reason why there are so many frauds that are happening around us. We see so many corporate fraud, and whenever a fraud happens, the investor confidence completely shakes. Yet in our country, these things are taken very lightly. And I don't know why. In our country, these things are taken very, very lightly. Can't do much about it. Okay. So this is about the risk and what is the difference between error and fraud. So I told you control. Now I told you the procedures are to prevent errors and prevent or detect errors. Now, what type of procedures do we do? What type of procedures do we perform? Right? Audit procedures. If I talk to you about audit procedures, so there are basically two types of procedures that you do. One is test of controls. Test of controls. And second is substantive procedures. Now, each of these procedures have their own importance. Substantive procedures. Can someone tell me What is test of controls? What do you understand when you see test of controls? And what is substantive procedure? Anyone who's read it or something? Anyone who wants to try? Yes. Yes, guys. Anybody who wants to try? I don't know. The batch is not really responsive. I don't know why. Guys, why you not responsive? Okay, check internal controls and effectiveness. Great, great, Manisha. Very good. And substantive procedures. Okay, anyone else who wants to try? Why do you need test of controls? And it's also a part of your planning, right? It's part of planning. When you're testing controls, this is part of planning also. Yes. Tell me, why do you need test of controls? And what exactly is test of controls? Would someone like to Juhi? Juhi? Juhi is not there. Samir, Samir, Naman, Udit, Simmi, are you there? Simmi, are you there? Yes. You want to try? Yes, Simmi, you want to try? What is test of controls? Why do you need test of controls? I keep on speaking and come on, guys, try. The idea behind education to check mistakes in controls. Okay, I take your answer, but I'll say deficiencies in control, not mistakes, because controls are procedures. There are not mistakes in procedure. There are mistakes in transactions. There are deficiencies in the control. Great, great. All of you are giving great answers. Absolutely, absolutely. See, great answers, all of you. Very, very well said. Thank you so much. To see the way in which work is being done. Okay, I'll take that as well. So basically, see, your test of control will have controls testing. Basically, what it means is it's a planning procedure. It means you want to go and test if client's internal controls, the controls he has, so that the financial statements are. Why do you need controls? Controls are basically procedures to ensure that the financial statements are free from material misstatement, whether due to fraud or error, right? Now you want to check if the controls are working effectively or not. Now, see, to check if there's an entire chapter on this test of controls, don't worry. To check if controls are working effective. But when I discuss this with you today, so from the next class, that is tomorrow, when I actually start teaching from the notes that we've prepared, the good part will be that you'll already be familiar with so many things, right? If you suppose you go for an arranged marriage, so first time you see the boy or the girl, right? And then you see that, okay, this boy or girl, they are this, their background is this is their background. So you are a bit hesitant, right? But you meet them for the second time. So you become open to them, right? You start understanding them more. Then the third time you meet, you are almost like friends, right? You go for a love marriage, you already know that person. You already been with that person for say 6 months, 1 year, 2 years, whatever. Some people directly marry after they fall in love with someone, so that's a different thing. But when you have an idea of how the person is, it's not that shocking. I had a love marriage. It's been like 2.5 years. 16th of February, this is June, right? Yes, 6 months will end on 16th of July. right? 2 years. It's been more than 2 years. So see, always, hey, is there anyone who's married already? Anyone who's already married? Yes. No. Nobody. No one. Okay. So I had a relationship of 2 years before I got married, and it was an awesome relationship. But when it came to marriage, right? So the day I got married, the next day when I started living with my life partner, I found that I mean it's totally different. The way we were while we were dating to the way we were when we were together as husband and wife. I found that there's a ton of difference. We always used to show each other our best, but that's not always the case, right? So that is why you need always before you, if you know the person, it helps. It did to an extent, it did help, but it is always different. Marriage is always different. So when I tell you all of these things today, so from tomorrow when we start, actually from tomorrow or probably today also, we can start the first chapter. So when I start with you the first day, probably you'll have a better idea of what is coming to you, right? So I had an idea of what's coming for me on 16th of Feb, but it's always different. So that's a different story. Substantive procedure, there are, so you test the controls, you find if they are working or not, if they're working effectively or not, if they're working effectively or not. What do I mean when I say they are working effectively? I mean that the purpose of that control, the objective of that control should have been fulfilled, right? So the objective of the control should have been fulfilled. That is the purpose of that control, right? If the controls are working effectively or not. So if the controls are working effectively, then there is a very fine relationship between these two. So if you have higher reliance, if you can place reliance on the control, then you need to do less of substantive procedures. If you can place higher reliance on controls, then your substantive procedures, which is the sample, is going to come down. The number of procedures that you do. So there are basically two types of procedures in substantive. One is test of detail, which involves checking all the invoices, which involves checking agreements. Something's wrong with my throat. Okay. Which involves test of details involves checking invoices, checking agreements, checking all the vouchers and all, right? So the first year article, when he goes into audit, first year article, first year of your training, whatever, then you go there, you'll be given pile of work. So not exactly work on the, so my experience was not like that. My experience was that we stayed without work for 3 months because we joined in October, and that's generally a lean period. There is not much of work. So we were flying aeroplanes in the office, all of us 17-18-year-olds. Now someone is director, someone is senior consultant, someone is a partner of a CA firm, someone is director in one of the big four, someone is somewhere, they are finance controller or CFOs. All of my friends, when we started, some have their own businesses, some, I don't know, I don't remember anyone who's into teaching. I think I am into teaching, but not the people I started with. So we used to fly the aeroplanes, the paper planes in the office, and we were sent back home. We said we were given forced leaves. So we were forced to take leaves, and they said we can tolerate you in office. So when I went for my first assignment, what I was doing was I was Sometimes I was doing photocopy in the audit also, in the office also. I was doing photocopy. Sometimes I was doing staple. Sometimes I was stamping. Sometimes I was doing something or the other. Because, 17-year-old, just out of school, what do you know? You know nothing. That is why it is called training. So we went for training with knowing nothing. So that's why we were given these tasks. Sometimes we are also making coffee for our seniors, right? Sometimes we are making coffee. Sometimes we were doing the staple. Sometimes stamp. So that all that work. When we first went on an assignment, then also we were not given very serious work. But the first thing that I was given, and most of my friends were given, were to check expense vouchers, expense bills. We were given formats, we were given samples. They said just check these things, go and check, because that used to be the bulk work. They said just go, don't apply your mind, just go, just check if these things are there or not, if it is signed by the CFO or not, if it is above this limit, should be signed by this person. So you're doing test of details. Okay. Then another thing that we do is analytical procedures. Analytical procedures. That's again a type of audit only. That's again a type of audit procedure only, where what we are doing is basically we are building an expectation, comparing the actual to our expectation, then seeing how why it deviates, right? Mostly when we are doing a limited review, I'll just come to what is reasonable and limited assurance, right? Reasonable and limited assurance I need to discuss with you. So in case of limited assurance, when we are giving a limited assurance, we are only doing analytical procedures. We are only doing variance analysis. Some debtors we are confirming, or we are taking bank statements. We are not doing too much extensive audit. Let me tell you. So in reasonable assurance engagement, reasonable assurance engagement, and reasonable assurance is not a low level of assurance. You still need sufficient appropriate audit evidence. It's not that it is less of an assurance, it's just that it is not absolute, right? But it is still a very high level of assurance, right? And the second one is uh, limited assurance engagement. So limited assurance is basically when we are doing quarterly filings, right? So in India, SEBI wants that every company should present its accounts annually. Also, you need to present unaudited numbers quarterly. So for this, we give limited assurance. So these are limited assurance engagements. Fine. So reasonable and a reasonable assurance engagement. So what we used to do, let me just tell you a difference. I used to work on a listed client. To understand the magnitude of that client, just imagine that 80 people, a team of 80 people. That's a huge team. Do you think so? It's a huge team. They used to audit it. And at the last finalization day, none of these 80 would go home for 3 days. For 3 days, none of us would go home. That's huge. But a limited review, we used to finish in 1 week. Just 2 people. 2 people. That's it. In 1 week. Just imagine the kind of assurance we are giving in reasonable and limited assurance. 2 or maximum 5 people. 5 people used to be there. Sometimes just 2. If risk would increase, then we would give 2 to 5 people were there. In 1 week, we would finish it. So there's a huge difference between, in a reasonable assurance engagement, the language differs. So for example, in a limited assurance, right, the audit report will be that nothing has come to our view, nothing has come to our attention. Okay, let me just nothing has come to our attention to believe that the financial statements do not present true and fair view. True and fair view. For a reasonable assurance, our language changes. It says that we, in our opinion, we say that in our opinion, the financial statements present a true and fair view. So can you see the difference? What is the difference between the two? Yes, tell me, what is the difference between the two? In reasonable, we take the responsibility. Okay. And what is the basic difference from what you can see? Yes, I want more answers, please. I want all of you to participate. Please. No, just tell me what you can see. If you can see this, what I've written, what can you find from this? Just see from this. There is more checking. Yes, that is true. There is more checking. There is more work. But what is the basic difference in the language? I've given you a hint. There is a difference in the language. Yeah, obviously there is more assurance. That is why it is limited. Udit, what is the difference in the language? Mm, this is a positive assurance. This is a positive assurance. Whereas a limited assurance is a negative assurance. Do you agree with me or not? Yes, tell me. Yes, tell me. There is a positive assurance in case of a reasonable assurance. There is a positive assurance. Here, there is a negative assurance. If I tell, suppose your mother-in-law comes and asks me, suppose the girl or the boy you are going to marry, they come and ask me, how is this person? And I'll say that I've taught them and they are good. Is that positive or negative? They are good. They are good people. I've taught them. They have good knowledge. They have good values. They have good ethics. They are ethical people. Is that positive or negative assurance? Positive, right? But if your mother-in-law comes and tells me, asks me that, tell me, how's this person for my daughter or for my son? I say, I have taught them in front of me. They've never done anything. And I have nothing to believe also that they'll do anything of that sort. Is that positive or negative assurance? This is negative assurance, right? So you understand the difference between positive and negative assurance. That is the difference, right? Okay, this is a bit technical. But what I've given you as an example, that is a very general example, right? Can you give me 5 minutes, please? Just 5 minutes and I'll be back. Okay. It's 5 minutes, please. Okay. So coming back to the topic. Now see. So I told you what is reasonable engagement, reasonable assurance engagement, and what is limited assurance engagement. Now, the next part is that evidence. I've told you what kind of evidence do you need. You need sufficient, appropriate audit evidence. But in doing this, in conducting your audit, sometimes another very important question of your examination also, you sometimes have to use the work of others. Now, using the work of others, so there are three types of people whose work you can use. One is, so first is, one is an auditor's expert, right? Second is, the internal auditor. Second is the internal auditor. And third is the service auditor. Now, who are they? Let us discuss this. Third is the service auditor, right? Third is the service auditor. So obviously, you have to take help of some people, because can an auditor be an expert at valuation also? Actuary also? Can you be an expert at everything? And that is why it is said that you need to raise appropriate consultations. What does it mean? It means that you need to talk to people who are expert in that industry. You cannot do everything by yourself. And that is why you need an auditor's expert who could be a valuer, who could be an actuary, valuer, actuary. There could be other people also. Fraud examiners. There could be fraud examiners as well. tax experts also, right? Then using the work of internal auditors. Now, when you are using the work of an internal auditor, so first you'll need to understand what is an internal auditor, right? Can you tell me, does anyone know who's an internal auditor? Yes. Does anyone know who's an internal auditor? Yes. Tell me. Yes, guys. Who's an internal auditor? Tell me. Okay. So internal auditor, basically he's not focused on just the financial statements, but on the overall controls, overall operations of the business, and he gives a report to the management. They are generally not independent. Generally, they are on the roles of the company. Who appoints them, how they are appointed, how their independence is ensured, that we will study when we are doing. But internal auditors are not external auditors, and their focus is more on making the internal controls, on ensuring that the internal controls are effective, right? Then third comes the service auditor, right? So who's a service auditor? Basically, if you want to understand who's a service auditor, so a service auditor would be someone. So for example, I am a company called Nestle. Okay, I'm Nestle Co, right? And I give my payroll services. I say don't want to manage my own payroll services, and I want to give these payroll services to another company called Accenture, right? So this is the user entity, right? This is the user entity. This is the service entity, right? This is the user entity. This is the service entity. You become the user auditor, and the auditor who's auditing Accenture becomes the service auditor. So do you use his work? You take a report from him, which could be type 1 or type 2 report. What is this type 1 and type 2 report? When we study about this, then we'll read about that. But for now, I'm just introducing you to things. Okay, I'm just introducing you to the things. So that's why the auditor of Accenture would be service auditor. Okay. So then you will have to, see that what work he has done, take a type 1, type 2 report, right? So this is, but whenever you are evaluating whether you want to use someone's work or not, what I suggest is that you take Coca-Cola. Understand that cola is independent of Coca, right? Right? Coca-Cola. Coca means competence. Co means competence. Ka means capability, right? Check independence. So these three things you have to check, right? Just whenever you are using the work of others, just check Coca-Cola and understand that cola is independent of Coca. So Coca is competence, capability. Third thing is independence. Okay. Will you remember this? Yes. Okay. Yes, sir. Also, how much can you use the work of an internal auditor? Can you use the internal auditor for all your work? No. Only for specific work. You have to understand this with the entity, right? Also, any control that internal auditor has designed, can you get that control tested from the internal auditor? Tell me. So if internal auditor has worked on anything, can you get that part tested from internal auditor? Yes. Yes or no? No, sir. We cannot get that tested from an internal auditor. Whatever, if you've done some work, why would I ask you to audit it? Why would I test get it tested from you only, right? Because as I told you that Changu also becomes Raja Beta, and Mangu also becomes Raja Beta. Raja Beta is dear son. So he also becomes good, well and good, and the other party also becomes well and good. So that is why whatever controls that internal auditor has created, that should not be tested. You don't use them. Secondly, there are few areas where you have to apply your professional judgment. So there are some areas where you need to apply your professional judgment. What are those areas? For example, management estimates. The estimates given by management, right? The valuation, to accept if the valuation is correct or not, or if you need a valuer to certify this. So on all these places, you need to apply professional judgment. So you cannot use an internal auditor where significant judgment is involved or where there is key risk. If when you do an audit, when you do a planning, when you go and understand the entity, you find out what is the key risk. What is the main risky area of this entity? And you find it out, and then you don't give that work to the internal auditor. So don't give this work. Don't give this work to internal auditor. Don't give this work to internal auditor. Okay. But there is management estimate. There is some professional judgment where you require professional judgment. Don't give that work. Where there is key risk, don't give that work. Right? Where there is an involvement of management in something. Suppose internal auditor is doing something and management is also, management has to stay away. Management cannot intervene in that work. Okay. Management cannot intervene in that work. Okay. So right. Okay. Now, don't give this work to internal auditor. Also, again, professional judgment is involved. So management estimates, valuation, key risk. Don't give all this to the auditor, right? Okay. And I've told you, you have to check Coca-Cola of anyone whose work you want to take, whose work you want to use. So competence, capability, and independence, right? Use Coca-Cola. Understand that cola is independent of Coca, right? If you remember this, you will probably also service auditor. Then you take type 1 or type 2 report, right? We'll discuss that in greater detail when we go ahead and do the work actually, right? This is just when you go through this entire first class, take this for the last class and for your last half an hour revision. Now tell me this, will this be useful for you or not? This first class notes of the first class. Yes. Last 1 hour revision, last one hour, 1 to 2 hour revision. These 15-20 pages, go through them very quickly. This is great, yaar. We remember each and everything. That is the idea behind this. To make a document which will help you at the last hour, right? Because ultimately these are the things which people generally forget. So when you make such short notes of the entire audit syllabus, things are sorted for you, right? So that is basically the idea behind giving you this class and giving you this. I could have started straight away with the first chapter, but I thought to myself that no, first point is that you guys should be, first of all, be well versed. You know what is audit, because I know most of you come from BCom. Most of you come from class 12. You come from your jobs or whatever, and you are not doing an audit, right? Am I right? Most of you are not into audit. So these terms would not be something that you'll be hearing every day, right? So that is why this comes handy. Now another point is the assertions. So assertions are basically the qualities that you want to see. So when you see, when you go through a person and you go meet that person, you want certain qualities in them, right? Yes or no? When you meet a person, say for your marriage, when you meet a person for your marriage, so there are certain qualities that you see in them, right? The guy should be tall, the girl should be this, the guy should be this, should be earning this much, all these qualities, right? So similarly, when you check financial statements also, there are some qualities that you test. One is at the account balances. One is that you check at for the account balances, which is generally the balance sheet. And the second is which you test for transaction and events. Transactions and events. One is the assertions that you test for the account balances, and second is for, so suppose I give you an asset, a fixed asset, right? This mic, this is my fixed asset. I use it to earn my income, right? Now, uh, if I tell you what is one thing that if I give you a balance that this asset is for $5,000, this is for $5,000, $500, whatever. What would you want to check? What would you want to check firstly when you see a $500 mic? What do you want to see? What would you want to check? Tell me. That's your procedure. But what quality should be there in that account balance? What is the quality that should be there? So the name of that quality is valuation. We call it valuation. Call it valuation. You want to check if the value is correct or not, right? You want to check if the value is correct or not. Secondly, does it belong to the company that you're auditing? What is that one thing that you want to check? Does it belong to the company or not? Yes. Ownership you want to check. You want to check rights. And what else? If there is a creditor, what do you want to check for the creditor? You want to check obligation. So you check rights and obligation. Also, you want to ensure if this is your current liability or non-current liability. For an account balance, if it's your current asset or non-current asset. So you want to check presentation and disclosure, right? If there is anything that has not been disclosed about this account balance. So suppose I told you, okay, one more story. Okay, one more story from my previous one of the places where I've worked. One of the places where I've worked. What happened was there was a theft of $3 million of inventory. Some 21 crores of inventory was stolen. There was a theft. What did they used to make? They used to make hemp, opium based hemp, right? So they, just give me a moment. Okay. Now valuation, rights, obligation, presentation, disclosure. there is one part of your assets called inventory. You want to check valuation of your inventory, yes or no? Yes. You want to check valuation of your inventory. You want to check whether you have rights over that inventory or not. Yes. You want to check whether inventory is presented and disclosed well or not, right? So I was telling you this story, right? You want to check the inventory, right? But what happened was this 3 million, this 3 million, uh, uh, whatever this was stealing of this inventory, that theft of this inventory. This was not disclosed, right? Uh, and obviously, what we did was we hired the auditors in India. So SEC says that if any listed entity is there, you can hire the auditor in India. Indian CA firm can do the audit of that entity. CACMAs, they can do the SEC audits. So US audits can easily be done by CMAs also, right? So they said that you can do the audit as well. But what happens is that these audits you can do, but problem is that there has to be physical verification of the inventory. So when I physically go and verify, what am I trying to prove? Which assertion am I trying to prove? What, tell me in layman's term, what am I trying to prove when I go and physically verify? Tell me. What am I trying to prove? Which assertion am I trying to tell me? What quality am I trying to prove? No, disclosure is on the financial statements, not valuation. When I go and check, it's not valuation. Valuation is what I do based on condition, based on NRV, based on purchase bill. Yes, tell me, what am I trying to satisfy myself of? Suppose the inventory was not there. Suppose the inventory is not there. And I go and check it physically. And I find that the inventory is not there. Which means that the inventory does not. Yes, inventory does not. Tell me if the inventory not owned, that is rights. Yes, Simmi. It means that the inventory does not exist. So another very important assertion is existence. So what my auditors should have done is they should have gone there and checked if the inventory exists or not, but they did not do it because we did not allow them to do it. We said, we'll not give you the plane tickets. You want to go, you can go. So they compromised on that. They could even have given a disclaimer of that, but they did not. Our PAO, our principal accounting officer, he just signed the paper and he gave it. This is my inventory, this is a valuation, BFP. And auditors accepted it. Auditors actually accepted that. So they did not satisfy existence, right? Now, one more thing regarding inventory is whether the inventory belongs to you or not. So to assure yourself, you check something known as cutoff. You check something known as cutoff. Cutoff is basically that whether this, so, and even if you'll see that when we are checking sales, that is transactions, not a balance sheet part. Sales is a transaction and events, it's a P&L part. So we check cutoff of the sales, right? So we check for account balances, that is balance sheet items. We check valuation, rights, obligation, presentation, disclosure, existence, cutoff. Okay. Is that clear? Are you able to get a feel of what is assertions? I know obviously you'll not understand this till I give you examples, till we do a lot of questions. But are you able to understand? Cutoff basically, for example, see, if you have inventory lying with you, right? but it has already been sold. You have a sheet. What happens is the accountant will give you a sheet, but when you go, so what will happen is that you will be given a sheet which will have all the details of all the inventory. You'll have to give me 2 minutes. This thing is gone. Give me 2 minutes. I'll just give rest to Apple Pencil and my throat. Just give me 2 minutes, please. So what I was telling you, that you have say you have a sheet, right? But you want to ensure whether this actually it is sold or not. So what you do is, when you go physically count the inventory, you take the last goods dispatch note, which will contain this inventory number, contain the stock number, whatever the number is there. So last note after that GDN, there should be no dispatch. So that is how you ensure cutoff. That is how you ensure that you say, let's see, beyond this series, it's not been sold. So obviously it will be sold in the next year. It does not belong to this year. Fine, Manisha. It means that this does not belong to this year. The cutoff says that it has been sold. This, beyond this, everything belongs to the next year. Just give me 2 minutes. Okay. Let's come back to it. And let me see. So there's a very old procedure that you have to do, which is that you have to take the last GRN whenever you go on stock audit. That is, you go to count stock count. You take the last GRN, right, and the last GDN to ensure cutoff. What this means is that no goods were received after this and no goods were sent after this. So there should be, so whatever is there, then you check that and you make a, you do a stock count. Okay. So this entire procedure is for the purpose of ensuring cutoff only. Now, if I tell you for transactions and events, you want to ensure cutoff. You want to ensure that your sale has happened in this period and not the next period. So that's why you want to ensure cutoff. So the last sales invoice you'll have to check, right? So last sales invoice, take the last sales invoice, last GDN, right? Again, transaction and events, you want to ensure completeness. What is completeness? This means that basically all the transactions are there in front of you. Okay. Then you want to check accuracy, right? Accuracy, you make the totals, do the totals, that your total in the balance sheet and the totals in your schedule. Schedule is the total schedule that they will give you, that this sale we have made. You can check, you can take a sample of this. They'll give you a dump. It's called a dump. Don't be offended. It's a dump. I don't know. I was quite confused. Why are they calling it? Why are they giving me a dump? It was not a dump. It was basically an entire this thing. It comes from the software itself, and it's a listing of all the sales or all the purchases that they have made. So client used to say that give Satyarth this dump. So I was used to wonder, why are they giving me a dump? I am here to do audit. Why are they giving me a dump? Right. So again, obviously, so that is there. Assertions, cutoff, completeness, accuracy. Then you want to ensure that there is obviously occurrence. Do you want to ensure occurrence of a fixed asset or a current asset? Do you want to ensure occurrence of a fixed asset or current asset? Does a fixed asset occur? Tell me, does a fixed asset, does a balance sheet item occur? No. A transaction occurs, an event occurs, and that is why you want to check occurrence for transactions and events and not for account balances. You don't want to satisfy occurrence for an account balance. Obviously, you want to satisfy cutoff, completeness, accuracy, presentation and disclosure also. So you want to check if presentation and disclosure is appropriate or not. You'll have to check that. Also, you want to check if also, do you want to check existence for sales? Can a sales exist? Does a purchase exist? Yes, tell me. No, sir. You don't check existence for a purchase, right? So these are the assertions that you check for transaction and events. I think that's it. We've covered almost everything. Yes. So these are the assertions that you want to check. Okay. Now, so from your assertions comes the audit procedures. Now talking of the audit procedures. There are two types of procedures. I've already told you that. So there is test of controls and there is test of details. Now, what I want you to do is, what I want you to understand is that from assertions comes the procedure. Suppose you want to find out valuation of a debtor. What will you do? How will you find out valuation of a debtor? Think in your mind. How can I find out? One of the most important things in debtor is the provision for bad debts. If you can crack this, you can crack valuation of debtors. Then you have to just take a schedule of debtors, check. So how will you crack provision for bad debts? So the first procedure, you want to verify. Suppose you want to check debtor, don't take valuation. You want to check debtors. What will you do? Just see what all you want to verify for debtors. For valuation, provision for bad debts. How will you check provision for bad debts? You'll see subsequent payment. Subsequent means whatever debtor is there as on 31st of March, whatever year is there. Subsequent payments. You'll see subsequent payment for valuation, right? You want to satisfy existence. Yes. How will you satisfy existence? Tell me. I'm just trying to, bring to your notice that whenever you are giving an answer, think of the assertions that you want to satisfy, and then think of how will you satisfy the assertion. Written confirmation. Existence comes through written confirmation from your debtor, right? And similarly, if it's a bank statement, if it's a bank balance, you want to satisfy existence, bank statement. Sometimes valuation also bank statement, right? Valuation also bank statement, right? Valuation, existence, right? These two things important for debtors. Valuation and debtor exists, and it exists at the right value. Do you have right over it? Then you'll have to see if sales was made. Rights and obligations. Check sales invoices. For obligation towards your debtor, so if debtor has given you advance, check bank statement. Check bank statement for obligations, right? Check bank statements for obligations, right? This is how you can find the procedure in an examination hall as well. When you're giving your exam, just whatever they ask you, try to understand the question and then try and understand what is the purpose behind this. What is the purpose behind this checking of debtors, checking of creditors, checking of cash? What assertion am I trying to satisfy? Now, this is your procedure for checking debtors. No one can say that this is incorrect. And there is nothing that I've written from the book. Because I know the assertions, I know where will I find it. And that's how I do it. Okay. Yes. Is that making sense, people? Right. Now that is a small brief about how your audit procedures go. The next part that I want to discuss with you is so just introducing things to you, giving you a feel of how things are, what are we going to study, right? And in this series only, the series of introducing things to you, I want to introduce something known as, the next part that I want to introduce to you is, just wait a minute. Let me just see if what all have I covered. Assertions we are done. Controls. Oh, okay. One very important thing is whenever you're testing controls. So where is test of controls? Where is test of controls? Okay. There is no space over here. Okay. One very important thing is when you're testing controls. So basically materiality is an amount below which you don't check. But when you're testing controls, the objective of test of controls is to test the procedure, the process. It is to test the process. So suppose it is below materiality. If you found a deviation in the control, but the value is below materiality, will you take that into consideration or not? Will you, if it is below materiality, whatever performance materiality, overall materiality, that we'll do later when we talk of materiality, the greater detail. But tell me, when you're doing test of controls and something is below materiality, do you ignore it or not? Do you ignore it? If it is below materiality, do you ignore it in test of controls? In test of details, we ignore things below materiality. Ignore things or misstatements below materiality. In a test of detail, sorry, test of detail. Test of detail. You ignore things in test of detail, but when you're testing a control, even a 1 rupee deviation is not acceptable. Check for all deviations, because when you test controls and your controls are not reliable, your test of details will increase. Where controls are not reliable, test of details increase. Where test of controls is reliable, so when you find out 1 rupee deviation, it could mean that the entire population has this deviation, and then you'll have to do the test of details. So your work increases if the controls are not reliable. So you'll have to check if the controls are reliable or not. Okay. Yes, guys. Is that clear? So materiality, anything below materiality, that will not be ignored in case of test of detail, but yes, we ignore it in case of test of control, we don't ignore, but in case of test of details, we will ignore it, right? Yes. Is that clear? Yes, all of you. Okay. Now there is a very important concept known as going concern. Now I'm coming to the last parts because there's not much time left also. So there is something known as the going concern. Going concern, what does it mean? It means that the company has the ability to continue as a going concern. Now, why does it matter? Why does going concern matter? Why does it matter in accounting whether the company has an ability to carry on as a going concern or not? Tell me. Ask this question to yourself and tell me, why does it matter? Why is it important for a company to go on and as a going concern? Yes. As business, we know that company has to go on, give profits and all. But when I talk of this accounting, so that you present the financial in that manner. For example, if you take debtors and you don't have the ability to continue as a going concern, can you take provision for bad debts? Can you take provision for bad debts? No, no, sir. We cannot take the provision for bad debts. Why we cannot take? The reason is that the debtors will only be realized to the extent that we can realize them. You cannot make a provision for them. You cannot make a provision for bad debts, right? So you have to, then there is a liquidation basis on which you present the financial statement. There is a liquidation basis, right? So again, that is very important. Then talking of subsequent events. So subsequent events are the events that happen after the balance sheet date. So these are the events that happen, events happening after the balance sheet date. Now the question is, The question is uh, whether these events, they should be reported or not. The question is whether we should report these events in the financial statements or not, or we should report them in the auditor's report or not. Tell me, should we report subsequent events or not? Subsequent events, they are, tell me, should we report subsequent events or not? If they are material, yes, we consider them in the auditor's report. We do consider them in the auditor's report if they are material. But the point is, there are two types of subsequent events. One is an adjusting event, and one is a non-adjusting event. One is an adjusting event and the other is a non-adjusting event. Which adjusting event is that event which you get adjusted in the financial statement. That means the balance on the date will change. Now there is a small distinction between if an event is adjusting or not. So an event will be an adjusting event if it is going to be, if conditions exist. If conditions exist on the balance sheet date. But for non-adjusting event, conditions do not exist at the balance sheet date. So these are adjusted in the financial statement. These are just disclosed. They are not adjusted, right? So these are adjusting events. These are adjusting events and these are non-adjusting events. So conditions exist on the balance sheet date. They are adjusted in financial statement. Conditions do not exist at the balance sheet date. They are disclosed. Okay. The conditions exist on the balance sheet. I am coming to that. I'm coming to that. So now tell me one thing. Your balance sheet date is 31st of March. On 15th of April, there is an earthquake. And you get your building is completely demolished. It has to be impaired. Tell me whether the conditions existed or not. Not exist. Is it adjusting event or non-adjusting event? Tell me. This is a non-adjusting event. But if I tell you that there is no fire extinguisher in the office, there is no fire extinguisher in the office, and the office is next to a petrol pump. Office is next to a petrol pump. There is there is no fire extinguisher in the office. There is a fire through which you have a petrol pump and in which you have an office, but you don't have a fire extinguisher. And you lose inventory due to fire, which happened after the balance sheet date. Did the conditions exist or not? Did the conditions exist or not? There is no fire extinguisher. You are right next to a petrol pump. You're right inside a petrol pump. You have an office in like they have that office now, that there is a fire and that destroys your inventory. Will you adjust that inventory in your books or not? Yes, sir, we will adjust it. But if we had all the arrangements, to fight fire, we had the buckets of sand and all, we had nitrogen cylinders also and everything, then will you adjust or not? Sir, no. And you had insurance. you had insurance, then you will not adjust. Okay, because you had almost all the conditions that you were fulfilling. Okay, it's a non-adjusting event. Okay, right. So I think that's it. Also, there are some preconditions of an audit, which I will cover during the course of our syllabus. So preconditions are basically that the management understand that the responsibility for preparation of financial statement, responsibility for preparation of financial statement is of management, responsibility for internal control is of management, then responsibility for assessing the risk of fraud, assessing the risk of fraud is of the management, right? And the auditor's responsibility, and also providing the auditor with all the information that is necessary, providing the auditor with all the necessary information, right? So these are the preconditions of the audit. Okay, yes, is that clear? Okay, so that will be it for now. For the next 5-10 minutes we'll be open for any question, any discussion, anything that you want to ask me. How much time is it going to take, or how much, what we are going to do? Yes. I'll be open for that. Please throw in your questions, any feedbacks, any suggestions, any questions. Feedback, suggestion, question. Although you'll be getting a form for feedback in some after some classes, so don't worry. But generally, just generally, you want me to improve on something, you want me to do something that we will do questions. So that's not a concern. Don't worry. Today's class was not about us completing the topics. Rather, it was about getting introduced to the topics. Okay, and also generally, there are 4 type of questions that they will ask you. In section A, they can ask you anything, but in section B, there are 4 types of questions that they'll ask you. One is the risk and response. They'll give you a risk, or they'll tell you to identify the risk, which will be simple, and then give your response. Second will be control deficiency and control procedure and testing. Controls, testing. What is the control test that you will perform, right? Then what they'll give you is ethical threats and safeguards. They'll give you ethical threats and they'll ask you the safeguards. So I call ethical threats as fussy and safeguards as scissor, right? Then fourth, ethical threats, safeguards. Fourth will be the procedures. I've already told you how you find out the procedure, but we'll do it in greater detail. Just introduced it to you that you use the assertions to find out the procedure, because generally procedures are given to you how to test it, but you don't know why you're doing it, right? So that is why assertions come. That's how assertions take place, right? That's why assertions are important. So these 4 types of questions are there, of questions in section B. Section B of your exam, section B of exam. So this will basically be your types of questions. Anything that you want to discuss, guys? Anything that you would like to? No, the fraud was from 2012, Manisha. The fraud was happening since 2012. They were not repaying since 2012. And in the auditor's report, they said that we have no reason to believe that they will default on their fixed liabilities. So I just wanted to tell you that how easy it is for the auditor to, go to escape. It's so easy for the auditor to escape. Right, Manisha? Because you have to use professional judgment, right? Because you have to use professional judgment, then it becomes very simple that, okay, this was not the case. At that time, we, in our professional judgment, we thought this is the best possible scenario. There is a company where I stay in Lucknow, and there is a company in Lucknow that's giving money and a car to its auditor to sign a balance sheet. No one is ready to sign their balance sheet. Their founders have been to jail as well. It's a very famous company. I'll not take the name, but it's a very famous company. They're giving a lot of money and they're giving a car as well. Their founder has been to jail as well. It's a company from Lucknow. I think some of you will know that the name of the company. Uh, it also had a Formula One team. That company also had. It's not Vijay Mallya, don't worry. It's not Kingfisher, but they had a Formula One team uh, that did not do as well in Formula One. Okay. Yes, guys. Anything else? What about the others? Simmi, Amit, Amit. Yeah. I don't know. We've not been introduced, Amit. You've just joined. Naman, Samir. Anything that you, yes, please suggest, Simmi. Uh, we don't generally encourage that, but on very typical occasions, I do allow that as well. But we don't encourage that. We encourage you to type in the chat box, because then otherwise it's going to be very chaotic if we let everyone unmute. Right? It is going to be, definitely it is going to be more interactive. If you have anything that you want to add, and specifically you want to, you can request me that, sir, can you please unmute me? This is something that I would like to add. So yeah, definitely we could do that. Okay. Yes. Anything else? Okay, guys. Thank you then. Thank you so much. If there's nothing, please feel free to any connect with me anytime. You guys have my number. I'm there on the group, so you can connect with me, and you can connect with me on social media platforms as well. I prefer not Facebook, prefer LinkedIn, so I'll stick to that. Yeah, and my name is Satyarth. You can find me as Satyarth Prakash Dwivedi. Thank you so much, Samir. Satyarth Prakash Dwivedi. I write ACCA in front of my name. Thank you. Thank you, Naman. Thank you so much. No problem, Amit. I would love to know you. Where are you from and what do you do? Thank you. Thank you, Simi. Yes, Amit, I would love to know you. Please. You're working with which company? Okay, guys. Thank you so much. Then I'll see you guys later. Bye bye, guys. US based MNC in Gurgaon. Gurgaon. Okay, great, great. I'll also be coming to Gurgaon very soon. Somewhere in Aero City. So probably we can meet sometime, right? Okay. Bye, guys. Thank you. Bye bye. Bye bye. Thank you. Bye, guys. Take care.